Wow, year three, Jolene. It has,
Yeah,
wow, there's a lot of, it's
a
been a
lot of.
hoot.
You said,
It's been a hoot. Like, a serious hoot. Wait, whoa, okay, we got the gloves going on? Yes.
I just needed a monochromatic moment, so here we go.
Okay. Well, it's nice to have you back. I mean, I hope that everything was good for you. But, you ready to, end 2022 with a bang?
Yeah, I'm ready. I guess. No, I'm just kidding. I'm ready. Where's my
All
water?
right, well, all I know is the champ is here. Ladies and gentlemen, cue that intro.
That's her.
All right, so what's good, everybody? I am Mark Monroe, accompanied by my wonderful co host, co producer, and good friend, and all things galactic, and of course, very leisurely. I mean, clearly. Give it up for none other than the wonderful.
Oh, Lord have mercy. It's Jalen GC in the place to be, coming straight back from the motherland. And let me tell you, I'm still on South Africa time. So for me, it is whatever time, but the next day. So it feels like it's like 3:30 a.m. Whew.
So, we're both a little jet lagged. Well,
Yes. How was
me
your
a little
trip?
jet lagged. You, on the other hand, you're just in a whole different space. But, we're going to push through it because we got to, like I said, we got to end this year off on a bang. And, there's no other way to do it. All right. So, if you didn't know yesterday, it was an amazing show. It was the premiere of Lawrence's The Market. You
Yay.
know, Monday night talks. So pretty much it's going to be so interesting because of the fact that it kind of like frees us to be able to go on and talk about other subjects while also giving an amazing individual with an amazing platform, and on top of that knows what he's talking about, is still always and forever will be a student of the game. And so it was amazing just gracing the stage with him yesterday in Atlanta. The only
Mm.
thing that sucked about it was I couldn't stay there longer. I had some other obligations back home that I had to quickly get back to. But, if I said I'm going to be there, you know, I'm going to do my very best to show up. So it was amazing. We rocked the stage, we rocked the mic. People got to see exactly how tall I really am, all that other good stuff.
Oh
So,
Lord.
people don't realize, like, my
I
monitor,
know.
like, literally sits at where my hat is.
So it
So
makes you look short. I mean, but us being tall and everything is just like people just get so confused. They're like, "What? Are you really that tall?" I'm like, "Yes, I am."
yes, indeed. Well, let's get to it. So if you haven't subscribed yet, go ahead and hit the subscribe button down below. And on top of that, if you want to be in the know, just like who was it today? Who was it? Who was it? Who was it? Who was it? Ladies and gentlemen, drum roll, please. Uh
Hold on, let me find them. Oh, I got it.
oh. What?
You
Who?
see?
Who is it? It was King Rel in the building talking about, yo, fam, what's good with you, my guy? Shout out to you, King Rel, because you had your notification bell turned on and you've been a huge supporter of the channel, and we definitely love your energy and vibe. So thank you for supporting us and being first in the chat. We see you, and hey, that's kind of dope to go out on the Avs year finale. So, we out here. All right, so yeah, and on top of that, if you like, the vibe here at the Come Up series, just be gracious and hit that like button. We totally appreciate it. But, if not, it's okay. I have a feeling that you may like it by the end of this episode. So, Jolene, how did we do in these markets? This is the last time that that I guess we'll probably do this for the end of for 2022.
Oh my goodness. Totally. Okay. Well, what do we have here? We have the Dow. Well, the Dow is up. It was up, by a little sprinkle, 3.07 points. We're now at 33,852.53. And S&P 500 was negative 6.31 points. So now we're at a little below 4,000 at 3,957.63 points. The NASDAQ was down negative 65.72 points. We're now below 11,000. I don't know why the NASDAQ wants to play these games, but whatever. We're at 10,983.78 points. The VIX is currently at 21.89 points. And let me see, the US 10-year was negative 0.008, but we are now at 3.74%. So, we've been maintaining close to that level. Heading over to sector performance, as it's 2022 and there are still 11 sectors.
Well, they're B12.
Yeah, there are 11. That's such a weird number. Anyway, we have real estate, energy, and financials holding it down for the top three. And then the bottom three, consumer discretionary, utilities, and technology. Heading over to our SIPs, if you don't know where to find those, you can go to the our Instagram page at that come up series, and you can scroll through and find our picks, aka the SIPs. And I would tell you what was what, but my CNBC app totally crashed with my playlist, and so now it's just all a mess. But let me just shout out a couple that I see that really were in the top. So we have American Express was up 2.35 percentage points. We also have UPS up 2.77 percentage points. And the Van Eck oil ETF was up 2.33%. You can energy was just up. Obviously,
I think that's OIH, if I'm correct.
Yeah, OIH.
Okay.
And let me just note some ones that were in the bottom. So in the bottom, we had Apple at negative 2.11%. Let me see, what else do I see? Amazon was down as well, 1.63%. And you can tell because consumer discretionary and technology were both down. So all of the market leaders in those sectors, they didn't do well today.
I think TQQQ was also down by 2.44%, and I think that probably topped it off as it pertains to the negative.
Yeah.
The bottom.
Yeah. So, I mean, we're coming towards the end of the year. So, we just have to keep an eye on how things play out. But right now, what everyone really should be focused on, Mark, is what that trajectory is looking like for the next 3 to 5 years. So now is the time of year, like if you haven't started, this is a perfect time to start doing your own research to form your thesis heading into 2023. 2022 was a time. So, now start thinking about like what's going to lead the way. You already know how I feel about that. Stock Bay, aka SMH. I mean, I don't even know what to say. Like it's
actually funny because I mentioned that last night. They were saying, what is your pick for, what is my pick that I'm bullish on for 2023? And I said the semiconductor space I'm bullish on.
I mean, well, semiconductors are foundational. So, I mean, without them, nothing's going to be popping off in the tech sector anyway. So, if you really are about that tech life and innovation, then SMH is and forever will be my stock bay. So that's where I'm looking at for next year. And I'm still in my research process. So all through December, when we're offline, that's what I'll be doing. Like I don't celebrate holidays, so I won't get distracted by holiday shenanigans or anything like that. So that's what I'll be doing, Mark. What are you going to be doing during the December time?
I've got a lot of things that I've been working on lately, and I'm going to give a slight little insight to what is it that I got going on, for 2023. But yeah, I think I'm going to start getting in my recording bag.
Okay, I see. So,
we got a few startups that are,
mhm,
finally coming to the stage. There's that part.
confetti,
And then on
confetti.
top of that, yeah, confetti, confetti, like, Lord, confetti. Just dump the whole dump truck of confetti on me by this point in time. Um, I mean, then pretty much just closing out the year for a lot of the things, and then of course, checking my own thesis for multiple different facets. 2023 is going to be a lot of transition for me, especially when we get to the middle of the year.
Hmm.
So, just mentally preparing for a lot of the things that are just getting ready to hit my street. So,
Yeah, I feel you on all that. Oh, wait, I need to shout out cousin Jasmine and her husband because
mm.
I totally went to Zimbabwe on a whim. It just happened to work out. And the first night, I attend this boma, which is a traditional Zimbabwean dinner.
Hmm.
And, I'm about to throw down, I'm about to eat all the food, drink all the drinks, live life. And I hear a little voice that says, Jolene. And now I'm just trained. Like whenever I hear that, I know it's someone like asking me if it's me. And I turn around and it was Jasmine, our come up cousins, from the UK. So shout out to the UK. If you are here, throw up your flag, throw up your set. Um, and it was just really nice to meet someone. Her husband is actually from Zimbabwe, so that was actually cool to meet someone from there while they're living life. So that was really cool. So shout out to you, Jasmine, and your husband.
Okay, all right. So, you ready to get into it?
Yay!
Okay, so 2022. Been living under a rock in 2022 or just like completely a nomad. So the Fed literally got into its tightening mode as well as its rate hike mode. So pretty much what took place. So we saw 50 basis points and then a series of 75 basis point moves, and when we say series, four of them that followed. And then of course they started doing quantitative tightening as well, which was pretty much removing things off of its balance sheet. And then the markets reacted. Of course, we had other things that were transpiring. Say, for example, the reason why energy's up because of the fact of oil production that was not produced as highly at the end of 2021, and then they finally got started in production in early 2022. But by that time, it was like okay. And then, of course, Russia and Ukraine started beefing with each other. So, of course, that played on to commodities, which spiking up prices. And then on top of that, what we saw in the tech sector, where we saw a lot of oversupply, especially since during the pandemic there was not enough supply, so a lot of companies had to like literally get back onto the horn and literally start supplying, and then they found themselves with so much supply that ultimately it drove down demand, which also killed prices, which we're probably starting to see during the holiday season. So if you did Black Friday, Cyber Monday shopping, then you probably noticed a significant slash in prices. So there was that. Let's see here. We had a few elections that took place as it pertains to the House now being controlled by the Republican side of the party. And then, of course, we have the Democrats maintaining the Senate for now, as it pertains to. I think that we still don't know what the results are from Georgia. I think it was just the early voting, so we're still waiting to find out how that happens. But it sounds like it's going to be a split with ultimately the split decision. It's either going to be a split or an overall control from the Democratic Party. So they'll control the Senate, and Republicans will control the House. Which there's also the stage in which we'll probably talk about the landscape, but not really get into the whole politics thing in
Mhm.
2023. But to kind of like give some insights there, and especially in how it affects markets as well as businesses. Let's see what else happened. Oh yeah, rate hikes. Remember what we talked about those? So interest rates and mortgages went high. I think we reached to a 7.23%,
It was a
which
little bit.
is
Mm-hmm.
yeah, that was that was the spike of the century. Let's see here. Inflation waged on and got very much so out of place and out of pocket very, very fast. Um, I mean, honestly, there was just a lot that was happening. It was like we went from pandemic, and then we were like, okay, we look around, the coast is clear, and then of course you walk around and you think that you're good, and then next thing you know, you get sucker punched by inflation.
The
And
gift
so the
giving.
gift that keeps on giving. I think that's the best way that we can wrap up what 2022 was for the market, which
It was
was the
so
gift that keeps
fun.
on giving. It was. I mean, if you were shorting the market, then you probably had a phenomenal year. We saw the S&P 500 and the Nasdaq definitely go into bear market territory. S&P 500 still sitting like I think within correction territory. Nasdaq on the other hand still sitting in bear market. I think the same thing that we could possibly say about small caps. A lot of the SPAC companies got crushed. A lot of the companies, even some of the top tech companies, got crushed.
Mhm.
One of my favorites, Tesla, has been taking an Uber beating, and oh yeah, there's this other thing that took place during the year. The founder, or well, one of the founders of Tesla, aka Elon Musk, bought Twitter. Huh, interesting. We had a few companies go bankrupt really, really quickly, and it was kind of like a domino effect. I'm probably sure that there's going to be some fraudulent cases that are going to come up there. Cryptocurrency got crushed as well. It kind of traded alongside with the
Yeah.
Nasdaq. But yeah, so that's pretty much the year of review. But then at the same token, we had some bright spots there. Of course, we had energy up, we had healthcare, and I think we also had like I think for a slight moment there we had materials also doing its thing for a hot second, and a few other players. So it depends upon where you were. I mean, it was either a good year or it was a terrible year, or in some cases it could be like a meh, even kill. All in all, there was a lot to learn and a lot to wrap up within that process. So, you know, like for example, Meta came out with a $1,500 pair of headsets that consumers thought that they should buy, when in reality, nope.
Mhm.
Shouldn't have done that. And then on top of that, it's like, a lot of the spending across the board has significantly come down. We're starting to see a lot of layoffs take place. Especially it sucks because of the fact that it's, during the holiday season when people
And it's
spend
cold
time around
out.
their families. It's cold outside. And on top of that, you got family coming into town, you got kids, or other
Illnesses.
responsibilities. It was just an interesting way to kind of like wrap up 2022. And if a person's literally sitting here for the first time listening in, they're like, man, this is very gloomy. Not exactly.
Mm-mm.
Here's the interesting part about it. Like, when we think about like these types of things that what we've seen in a year like this, it kind of makes you sit back and kind of like take it all in and put it into perspective and context. So, like, for example, you've had three solid years within the stock market from 2019 to 2021. And it's kind of like that moment where it's just like, okay, hey, let's take a breath real quick. The market, as we all know, is still headed towards an upward trend trajectory journey. But in the
Mhm.
grand scheme of things, in this year alone, and sometimes when you like look at a year, sometimes it can like show you that, oh, well, that happened. But then after that, it's like you kind of like start to see that, over time, in the grand scheme of things, it kind of like just represents a small blip on the screen. Now, of course, does that impact people in that interim time period? Of course. But it's always that interesting thing where you look at it and you say, I wonder, during that moment, when we reach that moment of capitulation, do people really start to look at the opportunities? Now, of course, here's the reality to it. You're going to have a bunch of folks that are going to literally fall off. You're going to have a bunch of folks that are going to literally say that this is not for them or whatever it is. And that's okay. But then there's going to be those other folks that are going to literally stay the course and continue on in their journey. And then you're going to probably see a differentiation as it pertains to the two paths that have now diverged. And I think that that's where we're kind of looking at right now when we think about where the landscape is as it pertains to retail investors. It's really going to set the stage as it pertains to, okay, hey, I've stomached 2022, okay, which was a terrible year, but I also had two phenomenal years before that, which was a pandemic. You know, all three of these things are kind of like domino effects of each other. So now it's the question of where do we go from here? Now that the market is like started to take in, exactly like, okay, hey, well, we got to get back to some form of normalcy. I think that we're still headed there. And I think the biggest thing is instead of just looking at the markets as a whole or just looking at like say for example a specific, index, I think the best way to do it is this is the moment where you start to look at the business.
Mhm.
This is where we start looking at the businesses. But, just to keep it simple for everybody because I did put together some trends as it pertains to what we'll probably notice in 2023. So I think that inflation is still going to be here. I mean, I think that come on, I think that's a duh item.
It is.
Inflation will still be here, and now will it be as running rampant as it did this year? I don't think so. I think that we'll probably be headed towards a more deflationary environment. Okay, so with that, could the bear market stick around? Maybe just for a slight little bit where we start trading within a channel or within a range. But then after a while, you'll start to see that other areas, like, even though Jim Cramer hasn't been fully right this year, he has been right on some of the other things which remains tried and true. There's always a bull market and a bear market somewhere. So there will be opportunities in other spaces. So I do believe that could definitely be a thing in the early part of the year, but then after a while, I believe on the second half of 2023, the market shakes that off. Let's see here. Bonds are probably going to be here just as much as the bear market. Of course, we've already seen layoffs. I think that we could probably be seeing more of those in 2023, just as a heads up. The biggest question I think that a lot of folks are going to be asking, especially from a lot of the folks that have been holding on to this promise as it pertains to its future, we're really at an inflection point of what's the next frontier for crypto. Is crypto really here to stay and can it recover given all the things that we have seen? Or is crypto going to fall apart? So, and I'll get into that in a little bit, but
Mm.
I think that we're also going to see, like, for example, the renewables market. So, like, renewable energy and those types of things. I think that those will start to, really be a little bit more so in focus. Let's see. I think that, when we think about workspaces, so you're going to see like a hybrid space there. But then also, here's an interesting thing, an interesting take that I want everybody to keep in mind. We're also going to see the rise of robotics and AI when it comes to other business models. And I think that we could possibly be seeing it make its way even further in the financial market space. So, for example, when we think about financial advisement, when we think about like even hedge funds, where you start seeing more AI advisors start to take place. We've already seen that there's AI-based ETFs where the ETF is managed by AI. So it's going to be interesting where I think that we'll probably start seeing more of that as a trend. So those are just some of the things in which that I see that are really going to be just on the immediate horizon for 2023, the questions that everybody walks into 2023 and asks.
Question.
Yep.
Speaking of questions. Okay, so if we're looking at, all these areas to look at, then what is the best way to formulate a thesis, like looking at some of the things you just mentioned?
I'm glad that you mentioned this because it literally leads me into I'm actually going to do a share screen today, which is rare, but hey, I believe that it's necessary.
Steady.
So one of the things that I give to a lot of my startups that that are within the FTC brand is we try to get them to focus in and hone in on business models, value propositions, and product market fits. If you're a startup, remember those three things that I just wrote down or that I just said. Business model, product market fit, and on top of that, value propositions.
Mark, you should take us off screen so this could be bigger because it's kind of small.
Oh, okay. Not a problem. Boom. Is that better?
Yeah, a little bit.
I can do this. Is that
Yes,
better?
even better.
Okay. Sometimes I have to remind myself, screen resolution and everything else. I like to read things like really, really small. I know, I'm weird like that. So here's the reason why. If you literally look at this canvas, it's pretty dope because of the fact that you can literally kind of like hone in and get a clear understanding of, what am I looking at? And one of the reasons why I like to choose Apple a lot is because of the fact that it's so well known. It's, it's something that easy that everybody can pick up and understand. So, I think that is perfect. So when we think about it, like, these are the typical questions that anybody is ever going to ask you that from a pure investment standpoint basis of what makes a solid business. So you have key partners, your key activities, value propositions, customer relationship, channels, customer segments, cost structure, and revenue streams. So these are the things in which that really like are the meat or are literally the structural bones to making a business model. It like literally shows you what is it that they do or how is it that they do it and why they do it. So we're going to do a quick breakdown of this, if I might, so that way we can share, and you can still see my screen, correct? So that way,
Yeah.
okay, because I want to make sure that nothing's, I want to make sure I can still see like the production just in case there's a comment, like one of you send me a message. All right, so let's get to it. So first, starting off with, let's say, the key partners, right? So if we look at the key partners as it pertains to Apple is concerned, then we know it's manufacturing partners. Manufacturing partners all day for Apple. Now, if you notice, like, Apple has become world renowned when it comes to its supply chain and logistics. And that's the reason why. Because that plays a major part. If that domino ever falls apart, then you know that that produces a major challenge for a company like Apple. And then, of course, their other part that's a key part of their business is the cell phone carriers. Did you know that a lot of the cell phone carriers that literally partner with Apple, they literally buy out the phone from Apple? So that way it's like if you're paying, let's say, T-Mobile or Verizon or any of these other carriers, on a monthly for the phone, they've already bought it out. So they're now like how they make their money back is they charge you somewhat of a premium on that monthly. So that way they're getting it back on the interest side as it pertains to something that's profitable over, I think it's the next year and a half or 2 years, depending on, what your cycle looks like. So then let's get into some of the key activities. What are the key activities of Apple? It's always about new product development. Hands down, period. Nothing else needs to be said there. Right?
Mm-hmm.
Okay. So then let's get to the other part, which is the marketing. Apple spends a ton of money when it comes to its marketing. And why? Because it's all about the messaging. It's all about essentially, especially if we're selling a high-end device, it's all about the messaging in the sense that, like Tim Cook always says, we make devices that you never thought that you could live without. It's crazy, right? So let's get a little bit further into the weeds, shall we? Like if we think about like if we go a little bit further on Apple, and I'll try to get past some of this stuff. So like for example, if we look at the key resources, intellectual property, operational systems, digital platform, and then of course other related areas there. So their intellectual property is huge, which makes it a proprietary item. And then of course brand recognition, which ties into the marketing. Then let's look at value proposition. So when we think about value proposition, right, what makes value proposition really stand out is the fact that it's not just in the sense of, okay, hey, this is just a valuable product. Whenever you bring a value proposition to an investor or anything like that, it's more so in the sense of what's the value for me as a buyer, one, and then what's the value for the customer? Like what value do you provide to the customer? And so here are Apple's value propositions: premium high-end products and experience. So you know that like one of the things that Apple was always chided for, which was the lack of innovation. But the thing is that if you could say that where Apple lacks in innovation, they gain, say for example, as it comes to the user's experience. So with an Apple product, it's like, okay, hey, it's going to work. Versus somebody who's going to be ahead of the curve and literally try to be forward thinking and innovative, and they're going to try something and spend a lot of money towards trying, then ultimately for it to be in its first iteration, for it to probably fail or for the market not to be ready for it. So when Apple releases a product, they know that the market is ready for it, and essentially they say, okay, hey, well, we'll release this feature to this product because we know that the market is now ready and everybody would be willing to utilize this part. Like, think about it. If you look at the notch on the new iPhone 14 Pro, like that is literally slightly disappeared, but they now call it the dynamic island. Well, it's interesting because it really makes you ask the question, could Apple have done that all along?
Mm.
And the answer is yes. But the question is, was the market ready for that yet? Was the technology also ready for it? And then we talk about an ecosystem of interconnected services. Now, this has pretty much been Apple's world-renowned, thing in which that, like Android, where it's like when you're in the Google system, you're in the Google system. But then when you top off like adding Samsung on top of the Android, now you have two different ecosystems. Whereas with Apple, it's just one ecosystem, and all those devices pretty much interconnect and they talk to each other. And that's why they say when you try to upgrade or when you try to leave Apple, it's hard to leave Apple because of the fact that you're so locked into the ecosystem. And then, of course, access to iPhone and iPad user base. That's a huge thing where it's just like, okay, hey, and I think that kind of like ties into the ecosystem. So then, of course, I mean, a lot of these things people know, but these are the huge things that are value propositions across the board. That, I mean, if you know this, then kudos to you because of the fact is like you get it, and that lets you know that Apple has done a very good job to make sure that hey, you get it. Now, of course, the relationship with their customers is they love the brand, and then, of course, Apple Care. Their channels are Apple stores and app stores and iTunes. Very simplistic. It's very simplistic. One of the main things that I tend to find when I see businesses that are kind of like struggling is they have multi-channels, and essentially it's like, okay, hey, focus on the one thing or the very few things that you do very, very well versus trying to focus on so many different levers in which that you may not do them all very well at all. So then we get to customer segments. So of course we got product buyers, service subscribers, and app developers, and music and video producers. So the reason why we say music and video producers is because of course the iTunes music or iTunes that now has become Apple Music, and then of course now you have Apple Plus or yeah, I think it's Apple TV Plus, where essentially they're now doing even further content as it pertains to video. So that's huge because that's still a growing phase. And look at how many, I forgot how many awards they won, but now they're starting to compete with the likes of, let's say, the Prime Videos and, of course, the Netflixes and the Disneys of the world. And then, of course, service subscribers, I mean, that's the revenue that's now starting to supplant itself significantly. And the interesting thing about these areas is you're going to start seeing that, for example, services literally has, I think it is the second largest revenue driver right behind the iPhone itself, which is crazy. Okay, so then let's get to the cost structure, operational costs, and marketing and branding. So it's kind of interesting where we say, like, for example, here in the key activities kind of go with cost structure, which would make sense, right? Because operational expenses and all those other things, that's really the driver. And then, like we said, the revenue streams are product sales and high price tech, service subscriptions, recurring revenue, and of course, app and media revenue. So let me give you a quick breakdown of this. So app and media revenues, that's a 30% cut that they take from App Store developers. So since the reason why it ties kind of like into the story of the day, which draws into Elon Musk. So, and well, not just Elon Musk, but also Epic Games and many of the other app developers out there. Because if you think about it, these are major, like the app developers make up a significant portion of Apple's base, right? Without Apple, then a lot of these dominoes start to fall, or not really fall, but they could literally be significantly impacted. So the app developers represents a huge space for Apple. Now, you're taking a 30% cut from their revenues. So, which means that, not 10%, not 20%, but 30%. That could be huge for some of the companies out there. So again, that's something which it's a revenue stream, but it can also be an area of risk for Apple.
30%. Now, hold on, Mark. It's 30% once the app makes 1 million, right?
Correct.
Okay.
That is correct. Once when the company reaches a threshold, and we're talking about the bigger app developers here. Like once they reach a certain threshold, then at that point in time, now it's like, okay, you're taking a huge cut. And when you're smaller, it's like they're not going to cut you from your knees. They want you to get bigger. So then we get the service subscription revenue. So here's an interesting thing. Investors like this type of revenue stream. They love it. You want to know why they love it?
Because it's recurring.
Yes. So the beautiful thing about recurring is the fact that when all things are kind of like shaky, you have something that supplants you in the midst of everything else. So, for example, though that you could be taking a 30% cut from app and media revenues, and you never know what those revenues could look like for, say, for example, these companies, month after month. Though that, with trending, with trend analysis, you can kind of get a good idea. But yet at the same token, with service subscriptions, aka recurring revenue, it's a fixed revenue. So it's coming every single month. And then of course, the biggest part, which is your and then I'll break it down for you. So for example, product sales, their high price tech, that's their highest margin item. It's something in which that they live off of. So for example, the green represents premium high-end products and experience, which equals product buyers, and then aka equals product sales, the high price tag. And then if you think about an ecosystem of interconnected services equals service subscribers, which is reoccurring revenue. And then access to iPhone, iPad user base, which tags into the app developers and producers, which aka equals a app and media revenue cut of 30%. So you see how that kind of like goes hand in hand?
Mm-hmm.
Okay, so why am I talking about this? Right? Why?
Because
oh, go ahead.
my answer. Well, first of all, let's just points on like the visual layout. One pagers are my jam. Two, this has multiple applications on how to break down a company. But then also what you just said earlier about going into 2023 is going to be about looking at the businesses. So if you can break down a business in this format, then you can know like what is going to be a good investment and what won't be as good of an investment. And then also for Apple in particular, you can see the moat within the moat on each of those different sectors or sections rather. So I think that's pretty dope.
Correct. So interesting thing, like I actually discussed something yesterday at the event with Lawrence. And I'm hopefully, like, for example, everybody can kind of see where I'm going with this for 2023. I look at everything from an iteration perspective. That's been a part of my lifeblood for quite some time since I got serious about being within, the landscape of, startups. And so it's kind of like an agile methodology. A lot of, software developers or software engineers, they understand this hands down always because of the fact that everything is always an iteration. There's a part where you go through the brainstorming phase, and then there's a part where you go through the design, and then of course the testing, and then of course, then you go through the production, and then after that you go through again another testing phase, and so many other phases, and then it just repeats. And then we have iteration after iteration after iteration. And one of the examples that I spoke about yesterday evening was about Apple. And I asked everybody, like, where are we in the iteration cycle? So I'm going to give you a quick little, masterclass of how is it that I put together my iteration cycles for when I think about investments and moving forward. And this is a good use for me when I start to look at things, because of the fact that I think that in understanding where you are in the cycle of things and understanding the cycle itself sets up huge, so that way you're not having to jump from this to this to this to this to this every single year. Like, I've never been the type of person where I want to be reactionary. I've always been the person where I want to just have an idea as it pertains to where we are ultimately going. So let's talk about it. So the iteration cycle for me, as it pertains, or iteration scale, I should say. So we're going to call it the iteration scale. So iteration scale for me goes from 1 to 10. Okay? 1 meaning you have to literally, if you're investing in at the iteration scale of 1, then that means that you have this profound belief where it's just like, okay, hey, I just want to be in because it's something that's fresh, something that's new, that I believe that is disruptive and is going to cause a lot of, change and everything else. But at the same token, iteration 1 always has the highest amounts of risk. So it doesn't matter whether you're a publicly traded company or you're a private company. It's the same because the market is the market and it is made of people that all have different bases of opinions and also whether or not they are ready to accept whatever it is that you're pushing forth, whether it's a service or a business. So here we come into play. So at iteration number one, it's probably going to be the most scrutinized. Now, of course, it's the most probably talked about. It generates buzz, but at the same token, it's going to be like a product review. So we've all watched product reviews. Shout outs to MKBHD, who I would probably say is the best YouTuber when it comes to any type of tech reviews. Now, notice like when we talk about tech reviews, you typically see the good and the bad, and they typically review things that they're excited about, right?
Mm-hmm.
So let's say that, for example, we're going to play with everybody in the room today, so that way it's like we can have a little bit of fun. So yesterday I used Tesla and Google, so I won't use either one of those companies today. So Jolene,
Mm-hmm.
I want you to pick the company that we should play with on the iteration scale.
Okay, let's look at NVIDIA.
All right, perfect. So we're gonna hold NVIDIA. If everybody just put ticker NVDA in the chat so that way I can remember. All right. So we talked about level one. Let's talk about iteration 5. So iteration 5 is pretty much, okay, hey, we've gone through these iterations. And it's like we've learned from our consumer base or we learned from our customers. We learned from what the market says. And essentially we've made it better. By the time when a company makes it to iteration 5, they should probably have a solid footing on what is it that they do and what they do very, very well, what they're not doing very well, but yet they can make improvements over the next set of iterations to get there. But yet at the same token, the market is starting to take shape and say, okay, hey, they actually belong here in the space. Like if you want to use this as an example, think about like where cloud services or cloud cybersecurity services were, let's say 3 years ago. Nobody really talked about it though, that we had a lot of hacks and everything else, but yet the market was needing it. And there were services that were already there, but nobody was talking about them. But then as we got more and more where the market needed it more, then essentially we started to see this shift into cybersecurity and cybersecurity services. Same thing that we could say about cloud infrastructure, right? Once upon a time, everybody still had file servers that were literally stuck on their machines in their server rooms at their offices that would have to be backed up on a hard drive and then moved offsite somewhere. And then we went to like places like Dropbox and stuff like that to like store it on the cloud services. And then after that, then we went into like, of course, you had your Google Docs and Google Drive. But then we went into other spaces, like for example, using, putting applications in the cloud and letting them run off of a cloud service. So that way things could be faster. Thinking about like companies like Netflix putting their films into the cloud space so that way everybody can have access to the same file and watch it with like pretty much low latency, but yet at the same token, instead of sacrificing quality is still good. That's all running through cloud services. And look at the trajectory of where we come from. If you really think about it, what is that? That's 2008 that they went digital. So we're not that far off, but now we've gotten to a place, which leads me to my next thing, a 10. Iteration point is at 10 means that, okay, hey, you've been around the block a few times now. We already know this. We already know this song and dance. It's kind of like become a cornerstone in your business. And now we're kind of like at the point where it's just like, okay, we get it, but what's next? Now, I'll mention this. I'll give you one side of the scale, and I'll give you the other side, and I'll start going into NVIDIA. So on one side, so if we look at iteration 1, what would you say is a company that's probably facing an iteration 1 right now? In the chat. Like if you can, just put it in the chat. What would be a company right now that's facing an iteration 1?
Let's see what they're saying.
This is going to be interesting.
Someone says Neo.
Okay.
We have a little bit of a lag
We do.
Meta.
Interesting. I can see who was there last time.
SoFi, Tesla, Zoom.
Keep them coming, y'all. TTD, AMC. Okay. QuantumScape. All right, so as you guys can see, that these are a lot of companies that are like quote unquote on the like are somewhat innovative, disruptive, whatever that they may be. But one of the ones that stand out like that's and Palantir is one of them too. But interesting part, the one that's the most polarizing one. Let's take Meta. Now, don't worry, we're still gonna get to Nvidia. But if we look at what Meta is right now, like they changed the name of the company from Facebook to Meta to literally supplant themselves to say, okay, hey, we're focused on the metaverse. The metaverse represents a one in an iteration scale. Because why? It's something new, it's something fresh, it's something that a lot of folks don't understand. Like when they said, what did www stand for? Or what is email? Can you imagine back in those days when you were watching the show with Katie Couric and she said, what is email? Still hilarious. All right, so we're at that iteration one where it's like, okay, hey, though that we've seen a few devices, there's still a lot of things that people say that could be like big for this company, but yet at the same token, there's a ton of scrutiny there. Now, another side of the cycle, if we were to look at it from a different perspective, what would you all say is probably what would you say is iteration 10? Hopefully our moderators are looking at some of the junk that's in the chat.
Yeah. Someone is saying Apple. We got Ford, Uber, Microsoft.
Okay, so notice something what we're saying. So, for example, I'll keep it simple, and Uncle Charles kind of like scored it. Apple, because the iPhone has been here for forever. It's been around for forever, like God. And somebody could say Ford, but yet at the same token, Ford is going through some significant changes, which is ultimately putting it into a new product market space that they know nothing about. That brings a lot of risk. When you're at iteration scale 10 represents low risk because of the fact is like, okay, hey, the market kind of like expects it. Just like the market every year expects that iPhone sales are going to reach between 75 billion to roughly 100 billion dollars per quarter, right? And then so it's kind of like there's no there's very low expectations there. The bar becomes lower. But notice something: the bar becomes lower as you get higher in the iteration scale. But yet, at the same token, when you start at one, the iteration scale, the bar is set really high. So when we get to the five, I would probably place. That's honestly where I would place today's company, Nvidia. Nvidia represents a five, and here's why. Because the chip space is going through a pretty much a new phase. We're getting ready to see something completely different across the entire landscape. We already know about chips as it pertains to PC sales, but yet at the same token, other industries are requiring other chips, other types of chips. We're also starting to see that the chip technology as it pertains to where we are, like if you get the chance to read up on Moore's Law, which was interesting, created like by somebody at Intel, but that's a whole nother story. Shout outs to Marcus on that one. But when we think about like where we are, like who would have ever thought that you would hear about chips being in cars?
Hmm.
Autonomy. We're here now. Like, of course, AI has been around for a minute, but now we're at this point where we're starting to see robotics, Android, quantum computing. Those things are going to take a significant amount of like chips that are going to have to change. And I mean, look at like think about it. The U.S. has had how many years to literally enter into the chip space, right? Like, I mean, think about it. Like, from let's say 2012 So over the last 10 years, the US could have actually created its own foundries for the
Yeah,
chip
but
space. But we didn't until just recently.
late to the party. And I mean, we're definitely going, as far as innovation goes, we're paying.
Innovation, we're good. The problem is that our innovation is created from the minds of the innovators here,
Hmm.
the
But then,
design process of the process, but the manufacturing is done not here. It's in the hands of somewhere else. And I think that that's where we're starting to see, like, where we're starting to see a change in things, where we're going to start seeing, like, where things around us get smarter. You know, I mean, I'm probably sure that many of you are starting to feel it. You know, think about it like this. If we were thinking about the old guard as it pertains to like the GPUs that Nvidia sells, right? So Nvidia sells GPUs. That's how they started. That's the bones, the soul of the company is literally graphics cards. That's where they got going. From a graphics card technology, which is way more powerful than a CPU, they created a CPU from a graphics card chip. Then from there, they went into, AI data centers. And then from there, they took that same all those things in which that they learned, starting from graphical to now getting into cars, which they've been working on with NVIDIA drive technology. But the interesting part about it is now not only can it help it autonomously, but it can also visualize and recreate what the car sees.
which is wild.
So just think about it. Using vision from a simple chip or a few chips now. So let's say if you have two chips now in a car, one helps you as it pertains to the decision making, all the decisions that need to be made and everything else, to the second chip that's in the car, which allows it to like literally repicture. Imagine what that does. Like think about it. You won't even need like imagine what Google Maps would look like if you had that type of technology where everything that you did, it literally like when you're using your navigation, it literally shows you exactly where the turn should be made as it pertains to what the building should look like in real time.
Hmm.
It recreates those images for you, whether on your phone or wherever. Like, and I'm sorry, Louis. Yeah, it may seem a little bit over your head, but not really, because here's the thing: just picture exactly where you are, and honestly, the reason, and to answer your question, since I don't want you to get lost in the sauce, you said why is insurance going up then? So that was his question that he pointed. So why insurance going up then? The reason why insurance is going up is because of the fact that the value of those products are also going up. So the question is, does the company eat that cost, or do they move that cost over to the consumer? You're easily going to move that cost over to the consumer. Why? Because you know the consumer is going to pay it. Because why? The consumer knows that if their phone breaks or if their phone is stolen, they still want to be covered. So I'll eat the cost of the extra, what is it, $10, $25, the extra cost that goes into it. Like those are the things in which that we look at as it pertains to like iteration scale. Like when you start thinking about the iteration scale from 1 to 10, it literally starts to paint a clear picture. You start to see companies completely different from the way that they do business. And then you start to wonder, why is it that those companies that are now starting to get into legal fights with other companies, it really starts to beg the question. Either are they trying to break through a ceiling, or that are they trying to break through a ceiling that the old guard has held on to for so long, or have they run out of that innovation and essentially it's like, but revenue's got to stay and everything else. We need to, while we're waiting on our next thing, we need to be pushing something out. It's always an interesting thing that we kind of like look at. So it's not reiteration, it's just iteration scale. But thank you, VCN. So I want to give you like, so let's look at it also from a sense of as it pertains to risk, right? So iteration one represents your highest risk. Think about it like a startup. Think about it as if it's a startup. You want to invest in startups, but you're a non-accredited investor, which means that the money that you're going to invest, if you lose it, you'll definitely miss it.
Hmm.
So let's say that if there is a startup that's like, okay, hey, like at a high, like that's considered high risk. So high risk, high reward, but yet at the same token, can you stomach that risk? Now, when we think about 10 on the iteration scale, that means that, okay, the staying power is there. Think about it. And the reason why I use Apple as that example is because of the fact that look at what happened in this market. If Apple had fell to 129, the S&P 500 would probably be at 3,200.
Facts.
But it didn't. Why? Because everybody still held on to Apple because of the fact that they trusted it. Even with the bad news that we're hearing as it pertains to potentially, 5 to 8 million units being impacted, which is huge because when you think about like the cost of like every iPhone, which is about $1,000, that's being like, or let's say a range of $800 per device, and then they pocket about roughly, what is it, 45 to 60% of that, depending on the cost. That's pretty huge. So when they say that Apple's out here caping for the market, it's caping for the market for a reason because of the fact that it's an iteration scale 10. It's something that, you feel safe there. Now, let's look at iteration 5. And this is the part, like, if you've been paying attention to, like, where we're going with this, and for those that, like, paid attention last night, this is just a redrawing of, like, if you may have missed it in your notes, but this is for everybody. Iteration 5 represents that moment where it's like, again, it's like we've already reached that make or break. Because iteration 4 is that make or break moment. Iteration 5 says, okay, hey, we stamped ourselves, and we're pretty much on that cusp where everybody's going to start recognizing. So between iteration 4 and iteration 5, I tend to find every single time, doesn't have to deal with any type of strategy or anything like that. This is just pure, simple science as it pertains to understanding how businesses work. When you get to iteration 4 or 5, when you start looking at it from an iteration scale, and like really, and I'll show you guys how it's done. So if you think about iteration 4 and 5, those are pretty much what we say that the company's probably getting ready to enter into its golden years, where pretty much it's going to go for a run. It's going to go for a major innovation run, or it's going to go through a major market acceptance run, where now everybody starts to realize, like, okay, hey, the market has opened up, where the opportunity has presented itself. The business now is supported by the economics, and then boom, now everybody wants to be a part of it. Like literally, that's where we start seeing that, okay, hey, during that moment, and don't get me wrong, when you're in that iteration 4 and 5, they can still be somewhat risky, but the risk isn't at 1. But at the same token, when you find yourself at iteration 4 and 5, I always tend to find, especially when we go back and look at moments in time, every time when a company was at iteration 4 and 5, those were the times when you should have been invested into the company. That was the moment where smart money walked in. So when we always say follow the money, follow the money. I hate to say it, but if you think about it, look at, pay attention not only just to BlackRock, but look at other places like Vanguard. Look at, the KKRs, the Blackstones. Look at all the major funds out there, the money managers. Where are they putting 401k money at? They typically find themselves at companies that are iteration 5 to 10. So, if we think about it, so here, well, let me not jump ahead of myself. So let's give a quick little breakdown. And I know that we're getting ready to run out of time. So if you think about it, like the iteration scale is based upon when you look at all the services or all the parts of the business and where they currently are. And then you stack those up and then you take those numbers and then you average it. I mean, you can only give them from 1 to 10. And then out of those things, you put together the average. And then that's where you find out exactly where they are in the innovation side of things. If you want to get even more clearer on it, start breaking it down as it pertains to giving a weighting, as it pertains to how much of the business does this represent now versus later on, like over the next 5 years, how much of the business will it still represent? So for example, everybody thought that services would eclipse Apple's iPhone business. Hasn't happened yet. Hasn't. And I don't think that is going to happen for a while. The reason why is because the Apple iPhone is still a high margin item alongside with some of the other things in which it sells. And at the same token, you can't have those services without folks buying iPhones.
Facts.
So again, like when you kind of like, but now it's like Apple has a new product. So now it's like we look at Apple now as a 10 right now. But what happens in 2023 when they come out and say, okay, hey, we're now getting ready to compete against companies like Meta in VR or mixed reality with Reality OS? Now, does Apple still say a 10? Or does Apple now come down to like, let's say, a 7 or an 8? Still solid investment, but yet at the same token, it's like, we're like, we don't know what it's going to be. And it's interesting because then you start connecting the other dots, because now it's like, okay, hey, people will like, all right, well, Meta is a company that's on its way out. But at the same token, if Apple is jumping into its space, then doesn't that kind of validate what Meta is doing? So then ultimately you're going to have to give Meta a whole new number because of the fact that now they jumped into their space. The same way that we saw that companies did the same thing with Tesla when they came out with an EV vehicle and everybody mocked at it. And then now what do we see? Oh yeah, Ford, GM, Kia, Honda, and all these other companies, Stellantis, now all are producing EV vehicles. But yet you devalue what they do, but yet you're doing the same thing that they do. So
Right.
So now you have to like literally rethink exactly like, okay, hey, and this is where I'm telling everybody, like it starts to look completely different when you start looking at the business models and examining the business models as it pertains to where it is in the iteration scale.
So basically, if all next month is going to be iteration scales and that one pager, I would start with the one pager first and get clear on what the company's layout looks like, and then do the iteration scale.
Yeah. I mean, it's huge. It's huge, Jolene. It's really much so huge. Because, if you look at it, if you want to think about it, for everybody out there, don't even think about it as it pertains to the revenue model. Just think about every single part of the business as its own business. Start thinking about every single part of the business as its own business. So for Apple, would be devices. So that's all the things there. Then there's services, and then there's the App Store. Those can technically those can be its own business. Of course, they're interconnected and they rely on each other. But yet, think about where the business is and where it's going. Literally, that's the homework that I give to each and every single one of you as you look out for 2023 to, let's say, 2028. Like that's literally the goal. If the S&P 500 is going to get to probably about 7,000 points by 2028, how does it get there? Who's going to help it get there? Like, it's not like, and the crazy part about it is we were just at 4,700 at the top for the S&P 500, and now we sit at about 3,900. And this was quite the shaving that we took. Okay, so in just this year, that's where we got to. But now we got 2023, now we got 2024, 2025, 2026, 2027, 2028. What do those years look like? And what we always say is like after a while, people get bored off of hearing the same stories over and over and over.
Mm-hmm.
So if I could literally give you all, if I could literally give you all like, the best piece of knowledge and advice going into 2023, that right there is probably the best piece that I could ever give you. And the only reason why I know that that's probably one of the best pieces that I could ever give you that I know that I'm going to have to explain in greater length and detail in 2023, which I have no problem in doing so. But the reason why I know that works is because it works for entrepreneurs, it works for investors, and honestly, it works in, funny fact, it also works as it pertains to looking at people as well. Where are they as it pertains to the iteration cycle, as it pertains to their growth? Oh, but that's for a whole nother story.
That's a whole nother episode and a whole nother glass of water. Okay. And a cup.
It is. Indeed. Well, I mean, hopefully this is enough to get you all going, or at least to take you through towards the end of the year. Of course, I also have a surprise, Jolene.
Yay, I like surprises.
Because in response to us not being here for the remainder of the year, I don't want to leave our cousins empty-handed, of course not.
Of course
So,
not.
probably you may see in our place next week, instead of the show, you may see a new pick list hit the streets.
Ooh, spicy.
It
Another
is.
Mark, another thing to add to this homework, especially since you got a whole month to do this homework, is once you decide what iteration scale, like what number the company is on, then think about what would knock them down or knock them up. What other companies would knock them down or knock them up? Like when you talked about Apple getting into the space and then validating Meta, for example, and then that means you would have to move Meta up. Start thinking about what other companies have that power. Like once they intersect, what happens?
Can I say one last thing?
Yeah, go for it.
Sometimes the spirit moves me to say this,
Okay,
and
okay.
I mean no harm, no disrespect towards anybody when I say this. But what I meant by when I said about iteration of people is very
Mhm.
much so true. Very much so true. We are here to take each and every single one of you on a journey, a knowledge journey. We're not here to like, stay, stagnant or any of those types of things. My goal is to, and Jolyn knows this, my goal is to give as much of the knowledge that sits in this brain and put it out there for those in whom which that want to learn and want to understand. I am more than just a trader. I am more than an investor. I am more than an entrepreneur. But for some reason, those three things I do pretty well at. I'm not perfect. I'm not batting 1,000 or anything like that. But I do those things pretty well. And my goal is to make sure that, the come up series is not one dimensional. That's one thing that you will never find with us here at the Come Up series. We are multidimensional. And when you think about wealth, that is also wealth. So when you think about like, where is it that you want to be as it pertains to your learning of knowledge, focus on that going into next year. Think about where the iterations of people are. Think about the iteration of where you are as an individual, as an investor, as a trader, or as an entrepreneur. Figure those things out because then it's like it lets you know, like if you're at an iteration one, you're high risk. You're high risk, but yet at the same token, with a lot of high risk, there's also a lot of promise. There's a lot of potential. Consider yourself like potential. You've got the potential, you've got the skill, but yet at the same token, can you apply it? Can you apply it? Can you stay focused? Can you execute? All right. If you're iteration four or iteration five, then that means that you've done some things pretty well. Now you got to make that next decision as it pertains to where you go. And they say you can't fool if you want to soar with wings like eagles, you can't hang around turkeys. So those are the things in which that you got to be, very much so cognizant of. If you're a 10, you know, you got to kind of think about it like, yo, okay, you've been seasoned for quite some time now. What's the next step in your what is it, the S scale? What's your next vertical integration that recreates or allows you to redefine? Of course, redefinition comes with risk. Of course, going to an area of growth and scale carries risk. Of course, being new comes with a lot of risk. But the thing is that I want each and every single one of you to know is be confident in who you are, but don't be arrogant. And I want you to be brazen
Hmm.
in the sense of attacking these things with zeal. Like what I mean by attacking, I mean like looking at companies from an iteration scale perspective. Look at self and say, okay, hey, well, these are the things that I do well. These are the things in which that I've been able to validate based upon what the market, whether stock, job or whatever it is, the friends around you, you know, just it's nothing wrong with doing a simple, check to see exactly where you are. And, I do that like I say that with the perspective of don't be surprised if you see next year where a lot of folks, they had one trick and now the trick is over. And now there's no more magic. You know, that's the part where it's like, okay, hey, there's nothing wrong with that. But that's maybe a sign that you yourself have to evolve and go beyond and look somewhere else. Or also focus your attention elsewhere. So those are the things that I want you to just be very much so cognizant of, pay attention, and I hope that you all have a wonderful holiday season. It's been an amazing 2022, even with all the craziness and everything else. It's been amazing. Because honestly, it's amazing to me because I've never seen a 2022 before. And now I look forward to 2023 because I've never seen that before either, but I'm excited to see what it's all about and what its other mysteries are going to unfold for us. So I hope that you're excited about the next year. I hope that you're excited about ending this year on a positive note. And on top of that, I look forward to seeing all your faces or all your comments and chats in 2023. And also, at the same token, we do expect to possibly, pop up a few places in 2023.
Hey, we
So,
stay in traffic.
yeah. So, hope you guys enjoyed it. I hope that this definitely gave you value to, your knowledge base, and we're going to keep challenging ourselves to keep elevating and keep doing that. Until next time, I'm Mark Monroe.
And I'm Jolene GC in the place to be.
And this has been the AV, y'all. We will see you next year in 2023. But don't worry, you got another show that's going to definitely be kicking off next Monday. So enjoy, people. Peace, y'all.
Can't get out of this mood.